Okay, I am recording the meetup starting now. All right, hooked up future swing trading strategy. All right, so normally if we had an in-person meeting, I'd go around the room and ask people who they were, what they're trading, where they're from, so on and so forth. But since we're still on Zoom, we're going to bypass that portion of it. But what I want to make sure that everyone knows that they can unmute at any time. Don't raise your hand to ask a question. I won't see it. Unmute at the appropriate time, ask a question or type something into the chat window and I'll eventually see it, but you can interrupt at any time by just unmuting and ask me a question and we'll stop and address your question to the best of my ability. And other people in the meetup can also comment also. If someone has a question, they've had certain experiences on something, they can comment also. So keep it pretty flowing and open to anyone who wants to speak. All right. So today, let's go through just the technical stuff here. As a disclaimer, what we're doing is not investment advice. Everything I'm showing you is basically how I approach, and Becky, who's a co-host, approach profiting from the markets. How you choose to trade is up to you, but we're not recommending any particular item to trade in any way, shape, or form. We're just showing you the approaches we use to trade the markets, with today's focus being on futures. All right. So we're going to look at one particular strategy today and give you just a general understanding of it. The detailed understanding is what we'll do in one-on-one coaching sessions, because there are a lot more nuances to it. It works if the market's going up, it works if the market's going down. It's a long strategy, but it has a lot of detailed rules. So we just have a sample trading plan, the real trimmed down trading plan. The detailed one has like a checklist of criteria to determine if the trend is up, if it's down, so on and so forth. And then certain things have to be valid to take the trade one way or the other, or to pass. All right, before we start though, does anyone not know what a candlestick is, or how to tell, we look at a candlestick and tell the open, high, low, and close? Is there anyone who does not understand that? Let me know. You can unmute, say something.
I don't know what that is, Ev.
All right, Tim.
Yeah.
Tim is one of the people I met when I first came to California, and we trained in martial arts way back when.
And I still talk to him. So yeah,
we won't say how long ago that was.
Right.
That's the rule, remember? All right. I'm going to switch over to the chart, and then I'll go through what a candlestick is. Let me share. Okay, you should be seeing a candlestick chart now. Okay, on the chart, you see green candles and red candles. Yes. On this chart, green is representing an up day, meaning the market closed higher than it opened. The red candles represents a down day, meaning the market closed lower than it opened. Take a look at this candle right here, this red one. This rectangular portion of the candle is called the body. And the little lines at the top and bottom are the wicks. Okay, so on a down day, it meant at the top of the rectangle, that's the opening price. The bottom of the rectangle, that's the closing price of the day. It opened at this price up here. And if you take a look at the data box on the left, you'll see the open, high, low, and close. So if you take a look at the box, it opened at 35124 and it closed lower at 34618. The high for the day, the top of the wick, 35215, and the low point on the lower wick, the low of the day is 34592. We don't look at intraday time frames, just the end of the day, open, high, low, and close. Let's take a look at an up day now. Here is a green candle. It's an up day. So the market opened the day at this price at the bottom of the rectangle, and it closed at this price at the top of the rectangle. So if you take a look at the box, data box, it opened at 34234, which is the bottom of the rectangle, and it closed at 34633, which is the top of the rectangle. High for the day, the top of the wick, 34705, and low of the day, the bottom of the wick is 34104. And that is literally all you need to know for candlesticks and to read these charts as we're going to be working on them as far as the candlesticks go and price charts. Okay, so Tim, that's all you need to know.
Got it. Thank you.
There are other things where you need to know certain patterns of the candles in combination, but not for what we're doing today. All right. So I'm going to go back to the trading plan real quick, and then we'll come back to the chart. All right. So you should be seeing the sample trading plan, which is in the handout. And all of our trading plans are set up. This is just a sample. So the real trading plan, the first part of it has all the settings for all the indicators. It has when to trade and when to not trade, has a lot more detail in it. But we do a setup, trigger, and trade management. Those are terms I got from Jake Bernstein. The setup is visually what you look for. That's visual on a chart, what you're looking for. The trigger is something on a chart that is a confirmation that the setup we saw meets a certain criteria that will give us a statistical edge. Okay. And the trade management, what we have here is just a one-line summary. This is what we spend hours on working with you one-on-one for this part. The trading plan might only have 1 or 2 sentences. This is what we spend the time on. The setup and trigger is easy to find. The rest is going to be trade management, and that is real trading. That is when to get in, when to get out, how to scale in, how to scale out. So much more details on when to trade, when to not trade, trade size, so on and so forth. Right. Now we're going to go back to the chart, and we're going to go through a strategy on a chart. And someone or all of you or many of you can pull out a calculator. I'm going to be asking you to make some calculations along the way for me. And when you make those calculations, to type in the number in the data box. I'm going to ask you to make some calculations for me and type the numbers in the data box as we go along. Because I'm going to be going through the trade management, and I want to make sure everyone understands the general approach to the trade management and how we actually make money. And then I will go through several years, previous years of annual returns, and give you a general feel for how money is made over time. And make sure you understand you're not going to make money every week, every month. It doesn't work like that. You have to, it's a bigger picture point of view for profitability, not just what's right in front of you this week or this month. This month might be a loss. Next month might be a win. The following month might be a break even. So we're going to be going through that and showing you the numbers for the last three years, maybe 4 years. All right. Remember, anywhere along the way, unmute, ask questions. Or type it in. All right. We're looking at a chart of the YM. It's the Dow. And it's the Dow futures. How many of you are new to futures? You can type it in to say you're new, or you can even unmute, but how many of you are totally new to futures? Never traded futures before, okay? Olga. All right, let me do a quick shift to my account, Schwab. All right. This is on Street Smart Central at Schwab. And these are the different types of futures products that you can trade, okay? Index futures, energy futures, crypto, currency futures, metals, housing, livestock, grains, like soybeans, stuff like that. Food and fiber, lean cattle, lean hogs, live cattle. So there are many things you can trade with futures. We don't care about dictionary definition of futures. All we care about is tick movement, the charts. we are 100% technical traders, meaning the charts is what's on the chart determines our decision making and how we make money, not what's in some news report, not in some report generated by some organization. We don't read reports. Everything, all of our decisions are based on the chart and nothing subjective. It's just by the numbers, by the technical indicators. That's it. Okay. I know some of you are really new. This is an article on technical analysis I'd like you guys to read if you're kind of new. And I'm putting that link into the chat window on technical analysis. And it will give you a good understanding of how we use technical analysis to predict market movement. With technical analysis, we can predict short-term movements in the market within a certain given percentage of accuracy. It is not fundamental. Fundamentals don't tell us what price to get in. Fundamentals don't tell us when to get in, when to get out. It just tells you something might happen at some point in time based on these fundamentals. Technical analysis is what gives you, here's my exact entry price. This is the exact day. This is my exact amount of risk. This is my exact exit price. That's how we use technical analysis. It's exact, no guessing. It's objective. Anything we do is repeatable. It can be handed to 100 different people to review the exact same set of criteria, and those 100 people should come up with the exact same outcome and that we found using the same technical analysis. That's why everything we do has to be repeatable and it's not subjective. Okay. Everything rule-based. Everything we do is rule-based. That's how we can predict income, and that's how we've been trading since 2005 or 6. Very technical, because it works for us. So when you find something that works, you just stick with it. I'm going to go back to, okay, here are the futures products. Today we're going to look at some of the index futures. We are going to be looking at the YM in particular today, the Dow. So here's the YM, here's the Dow futures. If we're looking at a full size, one tick, meaning 1 point is going to be $5 a point. But we're going to be using the micro futures. Okay. With the micro futures, it's less margin and it requires less capital, and you can trade it in smaller accounts. So unless you, for some of these trades going with the full size contracts, you need several $100,000 in an account to really swing trade. With the micros, you need 1/10 that amount. So if you have 25,000, you can trade pretty comfortably, 25 to 50,000 very comfortably, trade everything we do without any stress and have a nice percentage return on your account. And you can trade as big as you want or small as you want. But if you're trading the full size, you're going to need way more capital. So here's the MYM, the micro. So on the full size contract, 1 tick was $5. So if the market went from 10,000 to 10,001, that 1 point move would be worth $5 in futures for the full size. For the micro, if the market went from 10,000 to 10,001, that 1 point move would be worth 50 cents. Okay, so that gives us the ability to trade with a smaller account and have as many contracts as we need, and accommodates a lot more people than several years ago. A lot of these micro futures were not really around until several years ago, and they're awesome to trade with. I'm going to go to margin requirements, so you see the type of money you'd be tying up. Okay, here are the index futures. If you were to buy 1 Dow contract with a full size, you would be tying up $11,000 in margin. And just to open one contract, you need $11,000 just to open one contract. And realistically, we need to be trading multiple contracts to get the full benefit of trailing stops and profit maximizing. So you can see how quickly this could add up. You get one contract of this, and if you want to trade a NASDAQ contract, you need $20,000 just to open one NASDAQ contract. So you need really big accounts to trade the E-minis. So that's now where the benefit of the micros come in. Take a look at the micro Dow. You need $1,000 to trade one contract, as opposed $1,002, as opposed to $11,000. Okay, so the micros really give us a lot of flexibility for most people to be able to capitalize on swing trading the futures without having to commit big chunks of their account and risk big dollars trying to swing trade futures and playing with the big boys. All right. So I'm going to switch back to the charts now, but we're going to be focusing on using the micros, although depending on the charts will be representing the full size contract. How you choose it, whether you use the full size or the micro, depends on the size of your trading account. So you can trade it with the full size, you can trade it with the micro. It just depends on how much money you have. But for most people, the micros are going to be what ends up being used. All right, here we are on the chart. So what we're looking at here, we're looking at a couple of Donchian lines. Okay, the purple line is a Donchian channel mean line, and the orange line is the Donchian channel mean line. The Donchian channel is an indicator. It has 3 lines on it. It has an upper, middle, that's the mean line, the average of the two, and a lower. We're only looking at the middle. So as a result, I made the upper line and the lower line transparent, so we'll have fewer lines on the chart that just take up space and we don't actually use them. So these are 2 different Donchian indicators with different settings. This one is a faster one, and this one is a slower period. So what we're looking for is the slower period orange line, that orange mean line, to go below the, this orange line is a faster, it goes below the slower purple line and hooks up. Hooks up means it's going down, then it increases in value after going. So it goes down, then increases in value. Whenever you see so it goes down, then increases. That's a hook. All right. So hook trades are one of the first technical approaches to trading myself and Becky learned when we first started trading back in 2005, 2006. First learned it from David Elliott. He traded many hook strategies, then learned it from Hubert Center's John Carter, then learned it from several other people. The hook being the first indication that a market is changing direction. And a hook can happen with multiple type of setups you use, but using the Donchians have really worked well for us as a group of strategies. And so we use the Donchian for quite a few strategies now, along with trigger lines. So today we're focusing on the Donchian strategies. All right, so if you take a look at the data box, you're going to see the Donchian mean line and the value right here. Okay, so let's say on this day, the value of the orange line is 33082. The next day, it's 32947. It went lower. The next day, it's still 32947. It didn't change. The next day, it's 33055. It increased. That's a hook up. It came here, it came down, stayed the same, increased. That's a hook up. Okay, that is visually what you're looking for. If it was a day you're doing your review to look for potential trade, here's what you look for. Let's say this is 3.9. Look at the chart. Nope, no hookup. The next day, look at the chart. Nope, didn't hook up. It takes what, a second or two to do your analysis on each symbol. YM didn't hook up, Dow, NASA didn't hook up, ES didn't hook up, and the Russell 2000. We're looking at 4 symbols for this. It goes that fast. Next day, you do your analysis. Nope, didn't hook up. You got no trade. Nothing to even look consider. No setup. The setup is the hookup. Didn't hook up. The next day, you look at it, did it hook? You look at the value. Nope, stay the same. Didn't hook up yet. Next day, hey, it hooked up. Now I know I have something to review. Okay. So at this point, I would go to my trading plan, a detailed trading plan. In a detailed trading plan, I have a checklist. The checklist is going to be a combination of using the squeeze indicator along with this movement pattern, this decreasing and then this hookup. This would, I'll let you know, this would have been a valid trade. Okay. So this would be a valid trade. It hooked up. It's over 84% or over 80%. All of our futures trades we do are over 80% wins. And I'm going to be going over how those numbers work out in a little bit. But that's all you're looking for. Each day you saw a hookup. Great. Now I have something to do. Okay. How are we going to trade this now is by first determining what my risk is and what my profit objective is. Okay, so I'd be going to my trading plan and I look at the stats. What's the win-loss percentage on it and make sure it's over 80%. If it's over 80%, I have something that I can trade. Up to this point, does anyone have any questions before I move on? Anything at all whatsoever? Don't shy away from asking questions. No matter if you think it's silly, you ask it because it helps to clarify things. Someone else might have the exact same question. Anything at all? Okay. So how do you assess the risk? Okay, that's what I'm going to go through now. First and foremost, I have to figure out what my stop loss is. I need to know my entry price. I need to know my stop loss price. And then I can determine what the risk is on one contract. All right. So for this trade, now here's where I need you to take some notes and write things down for me in the chat box, in the chat window. So I need someone to write, whether it's Becky or anyone else. I need you to type in numbers in the chat window. All right. We go long, meaning go up. So this is a long trade. We expect this market to go higher. Okay. If it's a short trade, we expect it to go lower. For this particular strategy, we're not going to enter the trade long unless the market is actually going higher. Okay. So just for the quick question, for the person who asked, how do you assess the risk? Can you unmute and clarify what you mean by that? Go ahead and unmute. I just want to make sure I understand your question first, because it may be different than what I'm thinking. Can you go ahead and unmute and ask? Yeah.
So the question is, how do you make sure like you're making the right bet, and how much would be the loss that you can afford?
Okay, good. So we have the same. Okay, so no problem. I know. Okay, so that is that. I just wanted to make sure we were on the same page with the question. That's what I'm going over now. Good. All right. So first we need to know the entry price. The entry price for this trade is going to be 20 points above the high. So if the high of the day is 33514, what is 20 points above 33514? Please type it in. 20 points above 33514. Van, you didn't use a calculator, did you? 20 points, yeah, you go. 20 points above, not 200. So 20 points above 33514. Someone type it in. Anyone? 33. High is 33514 plus 20. 335. So it's fun to see what people type. 33534, correct. So that is going to be the entry price for the trade. The stop loss for the trade is going to be 20 points below the lowest low in these 2 days. So take a look at the low of this day and the low of this day, find the lowest low and 20 points below it. So the lowest low in these 2 days, the last 2 days, is 32578. So what is 20 points below 32578? 20 points below 32578. Type it in. Okay. 32558. Okay. Why 20 points? Because after spending hundreds and hundreds and hundreds of hours researching what stops have to be and where they have to be under which day, it could be under 2 days, 3 days, 4 days, 5 days, under a certain technical point. After much review, we found 20 points works really well on the Dow, on the YM. We have different values for every futures, but 20 points on the Dow seem to work really well for us. So we don't get too many fake outs getting in, and we don't get too many fake outs being stopped out. And that's stop gives us the 80-something% wins we need. Okay, so that's ES is different for every strategy. For each strategy, it's going to be different. It could be 1, 2, or 3 points for the ES, depending on the strategy. So when we do one-on-one coaching, that's all in the trading plan, a detailed trading plan, the stop loss, the choice of stop losses for each thing we trade, and the choice of profit objectives. Okay, so now we know the entry price is 33558. Excuse me, entry price 33534. Is that the entry price? The first one we looked at. Get it again. High. So now what is the difference between 33534 and 32558? What is the difference between those two values? That's how big your stop loss is. What's the difference between those two values, the entry price and the stop loss price? Need the exact number? So we know the entry price and we know the stop loss price. What's the difference between those two values? It's going to be how we determine our risk. So once again, that's the difference between 33534 and 32558. Someone type it in. Okay, 976. I had to scroll down if I didn't scroll. All right, so that is the size of our stop loss, 976 points. Okay, it's not, that's how big the stop loss is going to be for this trade. Now we have to determine the dollar risk on one contract. We know how big the stop loss. We don't manufacture percentages. We don't just make up numbers for percentages or where the stop loss is. Your stop loss, your risk on the trade is going to be no more than 2% of your account. 2%. So it's the same risk on every trade, approximately. So we recommend 2% of the account risk on one trade. Sometimes it might be higher if you have a smaller account, it's just the way it is. But recommendation is no more than risking 2% of the account on one trade. And every trade should have the same approximate risk. You don't risk 2% of the account on one trade, 4% on another trade, 0.5% on one trade. That's ridiculousness, that because you have no predictability of what income is going to be and losses are going to be, and it'll be all over, and you just guessing whether you're going to make money or not. And you can't run a business like this, and this is a business. But if you keep your risk approximately the same on every trade, then you have predictable income. Okay, 976 points. Now, how much is each point worth? I'm going to go back to my Schwab account. I'm going to switch back and Street Smart, share. Okay, on the Dow. Contract specs and go to the micro MYM. Here we go. Each tick, this column is tick value. Each point is worth 50 cents. 1 point, 1 tick is worth 50 cents. Okay, 1 point is 50 cents. If you were doing the full size YM, 1 point is $5. The micro is 1/10 the size of the full size deal. So 1 point is 50 cents. So going back to the chart now. If the stop loss is 976 points and each point is worth 50 cents, what is the dollar? How much dollars are we risking on this trade for every one contract? Okay. So I'll ask Raj the same thing. Are you using a calculator? 976 times 0.5 is what? That's right, $488. So I always tell people use a calculator because you do it by hand, or in your head sometimes just mess up. Get decimal in the wrong place. So $488 risk on one contract. Okay. So we know how big the stop loss is on the trade. And we know that if we take this trade for one, if we want to risk $1,000 on the trade, how many contracts do we use or do we buy? If we want a max risk of $1,000, how many contracts can we get? Type it in or say something. How many contracts if we want to risk $1,000? And you know the risk on one contract is $488. If we want to risk $1,000, how many contracts? There you go, 2 contracts. So if you only want to risk $500 or $600, then you can only get 1 contract. But otherwise, you'd be well over your risk. If you want to risk $1,000, then you can get 2 contracts. So that is how we determine risk. Okay. Figure out how now different strategies have different ways to calculate the stop loss. But for this strategy, this is how we calculate the stop loss for this strategy. And probably the majority of our strategies is a similar type of approach. We have 3 different ways of calculating, 2 different ways of calculating the stop loss. And this is one of the 2. Okay. Pretty straightforward. Do we have any questions on this right now? I tell you, there are hundreds of ways to determine stops, but after we researched and traded literally hundreds of ways of trading over the years, this approach is a culmination of all that knowledge gained, and we use it for a lot of our futures trading. All right, the culmination of knowledge all assembled. All right, so we know our risk. Yeah, question? Oh, Olga.
This is Olga. I don't have a question, but it was pretty eye-opening that that was a hook up based
Okay.
on your measurement rather than visually. Visually, I would have had an argument with you, but
I think you had a question,
you did
something recently
yeah.
also, right?
Yes, I
Just-
see why I messed up there.
Like recently, like this past week, I think we had a hookup that wasn't ended up being valid. See, am I connected? 520. No, it was valid. We had a hookup right here on 517. So it was going down, down, down. The value is 31919. Value is 3190. It went down. And here it went up from 3190 to 3192. This is a hookup right here. Our entry would be 20 points above the high. It never went up to fill us. That kept us out of the bad trade. That's why we go long on markets going up and we go short on markets going down. It never went up to fill us. So this trade, we canceled the order after one day. So that was this past week. So that was a trade that came up valid on 517. That I put the message out to go ahead and cancel, make sure you cancel the orders the next day because it didn't fill. All right, so let's go back to one we were just looking at. Okay, so now we have our risk set. Now we have to determine our reward, and our reward isn't that 3-to-1 thing that makes people lose all their money, because that's how people interpret that is literal, and it's so wrong. It's not try to make 3 times your money, and that's what people think that means, because they take a literal meaning, and it's absolutely ridiculous. It doesn't work like that. You have to manage a position once you get to a certain level of profitability. 3-to-1 doesn't mean try to make 3. You're going to make 3 times your money on a trade. No. 3-to-1 means you're taking a trade that has the potential to do that, but you don't wait till you triple your money and that's what people think, and people lose so much money thinking like that, because that's doesn't work like that. It just means you have the potential to, but way before that you have to lock in profit and take profit and manage the position for greater profits. So every trade we take, we don't limit how much we can make. Okay. So every trade can go forever if we manage it right. If it keeps going up, we don't stop ourselves, because if the market is going up, we can still find ways to profit from it. But that has a few nuances also. So I'm going to show you some of those nuances in a little bit. We can't go through everything this afternoon, but I want to make sure you get a good feel for profitability and how we do this. All right. What we're looking for, the first objective is either 40%, 45 or 50% return on our money. If we're risking $1,000, we're looking to make at least 400 to 500 at the first profit objective. At the first profit target for this particular trade, I know it's going to be over 84% wins. But let's take a look at this now. Get those calculators ready again. Our risk size was 976 points. What's 40% of that? What's 40% of 976? Forty percent of 976. Type it in. Okay, 390. that at the very low end will be our first profit target. 390 will be our low end profit target. If we did 45 or 50%, it would be bigger numbers. But as you go with bigger potential profits, your win-loss percentage also drops off. On the trading plan, we'll show you those numbers and give you a choice of what you want to do, and also the actual dollar profitability over time historically. All right, so 390. Okay, right now, we're going to assume everything is based on $1,000. We're getting 2 contracts, all right? So if we get 2 contracts and this market moves up 390 points, someone type in what is, you might have forgotten, but each point is worth 50 cents on a micro. So if you have 1 contract and it moves up 390 points, how much money do you make on that 1 contract? If every point is worth 50 cents. Type it in. It moves 390 points. Okay, 195. And if you have 2 contracts, how much money would you make? I'm going to assume we're getting out the whole position of the first target. There you go. This is pretty straightforward. So now let's take a look at this now. So when there's no sitting in front of a computer this is not day trading. The market closes at 2 p.m. Pacific time. The market opens at 3 p.m. Pacific time. At 3 p.m. Pacific time, you get your orders placed, and then you go live your life. There's nothing else to do. We have everything we need. Enter the trade, walk away, nothing else for us to do. So how you would enter this trade, you put an order in to buy on a stop. And Tim, you don't need, or the new people, you don't need to know what the buy stop, sell stop, that type of details are right now. That stuff I'll work with you on later on. But what it basically means for buy stop, your order will not fill until the price goes above a certain price. So you can put in your order now down here, but it won't actually fill you on a position until you go above that price. All right, so you would put an order in that says buy stop 2 micro contracts at the entry price of 33534. That's 1 order. Okay. I need right now a target. What is 390 added to the entry price of 33534? So what is 33534 plus 390? That's going to be our target. 33534 plus 390 is what? All right. 33534 plus 390. So I think you're missing a couple of numbers there. So 33534 plus 390, 33924. Okay. All right. So that's going to be our profit target. So our entry order is going to look like this. Buy 2 contracts on a stop when the price of the YM goes above 33534, which is the entry price. When the price of the YM goes above 33534, at that point, it will not only buy those 3 contracts, but it will automatically trigger 2 other orders. One of those orders will be the stop loss, and one of those orders will be the target. It will say the 2 orders that will trigger automatically will be the target will be a limit order of a price of 33924, and it will be a stop loss, which we calculated, of 32558. So it'll be a 1 entry order, and it automatically, when it executes, will trigger the stop loss and target. And whichever one of the stop loss or target gets hit first, it will cancel the other order. You put your entire order in at the same time, your entry, target, and stop loss. It's all placed as one order. Okay, and then you walk away. This trade has one full day to fill, or else you cancel it. If it's not filled within that day, within the next 24 hours, you cancel the order. Okay, and that's literally how you set it up, so you can live your life. That's why I say this stuff takes less than an hour a day to trade. So you don't have to sit in front of a computer for hours looking for this to go up, waiting for it. No, you know, we're going to look at it anyway, but there's nothing to actually look at. The markets, the chart will look exactly like you're seeing right now. It's not moving. Might have some, it's canceling automatic. If it's to be filled within 1 day, then yes, it will be automatic. If it has to be filled within 2 days, then you have to go in and cancel it. So within 1 day, yes, automatic. Within 2 days, manual. So some of the things have to be filled within 2 days. Some have to be filled within 1 day. The way the order forms work out, you can have a day order where if the initial order isn't filled in 1 day, it will just, the whole thing will cease to exist. But that doesn't happen if you go more than 1 day, then you have to do it manually. So you would have some work to do between 2 and 3 o'clock in the afternoon in the next 2 days. And so, and if you have your phone or you are at your computer, you just pull up your app, or you go on, log into your account and cancel the order. Just literally cancel. That's it. Remember, there's no fees or anything unless you actually filled on a position. So obviously this order filled within 1 day. Target was 33924. The high this day was 340. So within 1 day, your first order, your first target got filled. If you had 2 contracts, you made your $390 if you exited the whole position. That's it. So you got a 40% return within 24 hours on your money. If you want to do more work and you want to trail stops, then you would only sell 1 contract at the first target, which happens sometimes, and then manually move your stop up have a secondary target higher up, and then move your stop up each day and trail it. That requires more time, work, and effort. That stuff I go over with you in one-on-one. We're not going to go over that here. But if you want to try to get more money, you can trail stops and have a second target. So you sell the first position or half your position at the first target, and then trail stops on the second half. Okay. But the numbers I'll be showing you is all based on getting in and out of the first target. So get out of the first target. Beyond that, you can, there are so many different ways you can choose to trail your stop. We can't predict income beyond that first target, but we can predict income at the first target. It's just up to you to decide, is it worth your while? Do you have the time, effort, and desire to spend time managing multiple positions, which you will have. At one time, you might have 5, 6, 7 positions to manage. Or is it in your personality to not want to have to deal with that? Are you just happy with getting your 40 to 50% return at the first target, which is probably 2 to 3 times more than the option trades without a lot less hassle? But that's all it is. It's personality and time available to actually manage positions and desire. In the end, you will probably end up making more money with a trailing stop, but it may not be that much to be worth your time, energy, and effort. So that's a choice you kind of make along the way, what you want to do. Okay. Up to this point, do we have any questions? I'm trying to keep this at a level that everyone can understand, since we have new people. The people I'm already working with, you guys can either ask now or email me later. We can chat later, any more detailed questions you have. I know some people are still new to actually trading this live. I know some of you I'm working with, and some of you have been doing this for a while. So it's like, yeah, cool. So do we have any questions at all? You can unmute and ask or type it in. Do you always have a trade between 2 and 3? No, I don't always have a trade. There are probably 10 to 15 potential trades a month. Is 10 to 15 potential trades per month. Not every trade gets filled. So if we have 15 trades that get filled, it means you probably placed about 20 trades. 5 didn't get filled. If you have 10 trades that get filled, then you probably had about 15 trades, but 5 didn't get filled. So, it probably takes, if you don't have a trade, it'll probably take you between 10 and 30 minutes to do your review each afternoon. And for the people I'm working with, I've given people the option to sign up for service with me, where I will email you trades valid every day and updates, so on and so forth. For people working with me initially, there's no charge for that until after a few months. Then if you want to continue, then there would be a charge. But for people working with me for the first time on these strategies, there's no charge for emailing you the trades every day. But after several months, if you want to keep that going, then there would be a slight extra charge. The non-chain channel is pretty much available on every trading platform or analysis platform out there, whether it's Thinkorswim or actually it's not proprietary, but it may not be available on every platform. I only have it available on Thinkorswim because one of the guys I work with, he programmed it up for me and gave me a copy. That's literally the only reason I have the non-chain channel. And the strategy is my strategy. The strategy is my strategy. But it's available on Ninja. So this is NinjaTrader. This chart is NinjaTrader, and it is readily available on NinjaTrader and many other platforms. Anyone I'm working with, I will provide you with all the charts and all the indicators needed for all the strategies on NinjaTrader. If you do your analysis on a different platform, it'll be up to you to program up the indicators yourself, acquire them yourself. A lot of them can be acquired. So different charts of different indicators being used. Futures.io have a lot of them. Some of them are on the NinjaTrader support platform. You can go and access. You just have to program those up yourself or hire someone to do them for a different platform. But I will give you everything you need for NinjaTrader and for Thinkorswim. All right. Any other questions on this right now? Anything at all? I'm going to go through some numbers to give you an idea for what to expect from profitability, because I need you to understand the big picture of how we actually make money, rather than some fantasy where like people are playing now with crypto and stuff. It's like, and they're thinking they're going to get rich overnight. We don't. This is not but this is a business. It's not about trying to get rich overnight. This is about trying to generate consistent annual returns on your money, consistently year to year. And if you do things, if you do stuff minimally okay, you shouldn't be making less than 20-something% return on your money every year with these future strategies. This is a grouping of about 10 different strategies. It's not just one strategy you think you're going to trade everything with. This is a grouping of strategies. There might be some strategies you don't want to trade. That's okay. But it's a grouping of strategies. When you trade it as a group is when you see the numbers. If you choose a smaller subset, then you can take bigger trades, basically. But all right, so if you don't have any questions, I'm going to go. But just so you see, if I just scroll back, did I say something? Did you say win rate is over 80%? 80% is our low end acceptable. 80% is our low end acceptable. If you see this comes up all the time. Down, hook up. Orange line comes below the purple line, hooks up, up day. Orange line comes below the purple line, hooks up. On this hookup, the order would not get filled because it didn't go higher within a day. Orange line comes down, hooks up, would not get filled, order did not go above. Hooks up, would not get filled, order didn't go above the next day. Comes down, hooks up, order gets filled the next day, nice trade. Comes down, hooks up, order gets filled the next day, nice trade. Comes down, let's see, 31075, hooks up. Order did not fill within 1 day, so the order is canceled this day. It didn't, it would have, if it went 2 days, it would have been filled, but the plan says 1 day, did not get filled. Orange line comes down, hooks up, filled next day, good trade. Orange line comes down, hooks up, fill the next day, good trade. Orange line comes down, hooks up. It's a red candle. We don't do down days. We pass. It would have been good trade, but we don't take it. It's a down day. Orange line comes down, hooks up, fills the next day. I have to look at the numbers. That low is 25381. This low is 25293 is that low. And this low is 25381. And this low is 25293. This would be a loss because actually it would not be a trade. This was valid on something that you would see in a detailed trading plan. This trade happened on 7/2. We do not place trades before federal holidays. We do not trade before any futures trades that come up valid right before a federal holiday, because more often than not, this happens is when the losses, probably more than half of the losses happen around holidays. So we do not trade around federal holidays. So this hookup, it's a good technical setup where we would normally be doing a buy stop getting in here, but it happened on 7/2. And the next day is the holiday, it's 3 and 4. So no trade. That's how we keep out of bad trades also. Came down, hooked up, filled the next day, good trade. And this setup happens all the time, all the time, all the time. So we traded on whether the market is going up or down, because it's coming down, 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 up. This market is trending up. And so, but it's always after a pullback. When the market going down, it could be a pullback in an uptrend or a pullback in a downtrend. But our trading plan has all the detailed checklists to qualify it and determine whether it's valid or not. Right. I was going to go on to profit and loss review unless anyone has any questions. So this is that's the strategy. That's how it looks in the chart. Now I'm going to go into some numbers so you get a good feel of how we actually make money, because a lot of people don't really know, especially newer people, how do we actually make money consistently, and how does it add up? So that's what I'm going to show you. I've shown this a couple of times before, but I want to make sure so some of the newer people really understand it. Share. Okay, question is, since when with over 80% overall annual gain could be a lot higher, right? That's what we're going to go look at right now. And this is all based on consistency. A lot of people think about 80%, it sounds great, but it all depends on how big your wins are versus how big your losses are, and whether you're consistent with it or not. So 80% alone does not mean you're going to make money. You could be at 95% wins and that 5% could blow out your account. Been there, done that in my early days. You have 95% winning trades and that 5% of losses, or one trade can wipe out all the gains you made on those 95%. You can literally lose all the money you made, those 95% wins, with one loss if you don't manage your positions correctly. Okay, so it's all about you and how you take care of your business. It's not just a percentage, it's how you manage it and how you allocate risk. All right, so I'd asked Becky to put together some annual numbers for the last couple of years for these strategies when traded as a group. So anything you see in a rectangular box from me comes from Becky. Becky does all the spreadsheeting. I do not type anything into little boxes. I just don't do that. I absolutely hate typing into spreadsheets and boxes. I do not do it. If you were to look at my desk, all my trades, everything is written just like this. Here are my trades. They're all on a sheet of paper with my entry, target, stop losses. I do not spreadsheet. I do not spreadsheet, and I do not spreadsheet. You don't have to be a spreadsheeter to trade. You do have to do some minor calculations, helps to write them down. You don't have to spend, I know one person, they told me they were spending 2 hours a day on their spreadsheets. I'm like, what the heck are you doing? And they got tired of trading because they were spending 2 hours a day on spreadsheets, and they said they can't do it anymore. There's nothing to do with spreadsheets. It's not about spreadsheeting. Okay, even you just got to write a couple of numbers down. It takes me 30 seconds. But some people try to document everything, and most of the information they want to document is already available on your broker's platform. Just pull it up. They're documenting stuff that seems important to them, but it's in reality, it's not in the big picture. But people don't always realize that until later on, when they realize that was information that's meaningless to them, or they can actually pull it up from the broker's platform if they need it. All right, so let's take a look at this. We did 19, 20, and 21, so we had 3 full years of data. So we're going to go from 2019 through the end of 2021 and show you how the numbers play out when you look at it from an annual point of view rather than from a day-to-day, week-to-week. All right, so we trade a combination of CD would be the Canadian dollar, AD Australian dollar, BP is British pound, ES is the E-mini S&P, NQ is the NASDAQ, YM is the Dow, SF Swiss franc. All right, so these are all the currencies, I mean, all the currencies and futures we trade. Dow, NASDAQ, S&P, and Russell 2000 futures, and the Aussie dollar, Canadian dollar, British pound, Swiss franc, and euro. That's all we trade, those 9 items for futures, nothing else. And the reason we only trade those is because they have micro futures available. The other futures contracts do not. There's also an issue with the charts, which is a little bit more to get into right now that I want to try to get into. A lot of people don't understand when it comes to swing trading and daily charts. You just can't pull up a daily chart of like corn on your computer or from a broker's platform, and it doesn't work like that. So you got to have your own charts that you're actually paying money for each month to get the correct chart of what you want to trade, but that's a whole different deal. All right, so let's take a look at this. January 2019, we had 12, 13 trades or so. How this is set up is based on a 50 grand account and risking approximately $1,000 per trade. Obviously, it won't be exactly $1,000 on every trade, but this is to give you an understanding, generally speaking, of the kind of percentage return to expect when you risk a set amount of dollars on every trade. If you're risking 1,000, realistically, one trade you might be risking 900 something, one trade you might be risking 1,100. So you got to stay just within that range. All right. So this one, 500 means it's a 50% return on your money for this particular strategy. Okay, and the stat sheet on the trading plan will show you whether to choose the 40%, the 45, or the 50, because the more money you want to make, usually the lower the win rate is. So a 40% return might be 88% wins, but if you look for a 50% return, it might be 73% wins. So that is what's detailed on the trading plan, so you know which one to choose. What Becky did with this is choose the ones that give us the best returns for each strategy. So this one would be 50%, this one would be 40%. All right. So these are all the trades valid, and this is only for the first target, not profit maximizing, not trailing stops, just all in, all out. That's all we can predict. We can predict our percentage return based on the first target. After that, it's subjective how people want to choose to manage the positions after that. But up to the first target, if you just went all in or out, that we know, right? So what happens here? Here are our winning trades. In the last 2 days of the month, we gave back some money. We gave back $2,000 in losses. Otherwise, this would have been $4,400. But that's what trading is. It's wins and losses. It's not just wins. People always forget about the losses, or when you hear people talking about, yeah, I made this much money doing this trade, I made this much, and they will never, ever tell you about how much money they lost on other trades, okay? They will never tell you about how much money they lost. They'll talk about their winning trades, but they're not about the losing trades, and they balance each other out, okay? That's reality. The next month, we had 4 trades. There might have been 10 trades this month, but 6 didn't fill. So when you talk buy stops and sell stops, there might have been many more trades, but these are the ones that filled and were either wins or losses. So the first month, you had a 4.8% return on the account, not on a trade, on the account. And that's risking 2% of the account per trade. Next month, 0.5% return. March, nice return. Remember, this is swing trading. We only had 2 fill trades in April. Okay. If you were risking $2,000 per trade, this would be $1,800. If you're risking $3,000 per trade, this would be $2,700. Same here. If you're risking $2,000 per trade, this would be $6,000. If you were risking $3,000 per trade, this would be $9,000. It's literally that straightforward. Everything we do is very scalable. Whether you have a 20 grand account, a 200 grand account, or $2 million account, it's all the same. It's a 40 to 50% return at the first target. Depending on your size account, you can quickly see how you can start making a living off this with a certain size account. It adds up, all right? So far we're going pretty well. We had a spectacular June, 3,004. Once again, it would be 6,800 if you're risking $2,000 per trade. All right, we'll still moving on. July, pretty straightforward each month. And now we're at the end of the year. At the end of the year, we are up $19,000, and that's a 40% return on the account. On the account, not a trade. This is based on taking all the valid trades. This is based upon running your trading business like a business. You show up to work every day, do your analysis, place your trades, and walk away. This is not based on doing any profit maximizing, not trailing any stops, not adjusting positions. This is just based upon placing your order, let it do its thing, and either be a win or a loss. That's all that this is, okay? Either going to be a win or a loss, or not filled. Those are your 3 choices: not filled, win, or a loss. So the minimal work needed, this is what it produces. So now we go take a look at the next year, 2020. 2020 is when everything shut down, and this was also our most profitable month of trading when everything shut down. This was February 2020, our most profitable month of trading, the 12% return on the account. This is usually what people make in a whole year. Okay, 10–12% is what people normally make in a whole year. You can literally stop trading right now at the end of February, and you would have made more than what most people make in a year trading, right? But we don't do that. We can't even think like this. But this is when the world shut down, and COVID was out, and the market started dropping. Okay, these 2 months when the market collapsed was our most profitable trading, 2 back-to-back months. Okay. We had a nice downtrend for a while there, and then on the rallies, all these hooks. We got hooks and we got trend line trades. The way we do trend lines, we didn't have time tell you to show you, but it's an objective way to draw trend lines. You don't have to guess where the lines are going to go. If I show 100 people, if I ask 100 people to draw trend lines, they're going to draw the exact same trend line. With a very rule-based approach, something we learned from the profit source people from way back when, who were doing analysis using Elliott wave, and some other people combine that knowledge. We learn how to draw trend lines in a very objective way so that it can be repeated. All right, so keep going with 2020. Another good month, another good month. Let's take a look at this right here. This is June. If you started trading with me in any of these previous months, you're happy. If you started trading with me in June, you're pissed because every trade you placed was a loss, a loss, a loss, a loss. You just kept losing money. And this is, you paid me to train you and you do nothing but lose money. And you get discouraged. It's like, this sucks, this program sucks, he sucks, everything. We don't know which months are going to be losses. If you started 2 months earlier, you're quite happy. If you started this month, you're not happy. You will be guaranteed to have 2 to 3 losing months every year, just the way it is. That's why I tell people you have to commit at least 6 months to see how the numbers play out. Because, and I'll give this year as an example too, because it's been really choppy, but I'll talk about that when we get, after I finish this. But you got to give it time to see the numbers work themselves out. Because yeah, you got a bunch of losses, and if you started this month, you got nothing but losses. And you lose confidence. You just paid money to be trained and do nothing but losing thousands of dollars in your first month. And it's my job to explain to you, coach you, relax, keep trading. You got to trust me. You got to trust the methodology, but you have to allow 6 months to see the numbers play out. If you don't allow 6 months, it ain't going to happen for you. You got to be consistent. You got to trust me. But you got to be consistent with doing your analysis every day, placing your trades, because the numbers work themselves out. You need 3 wins for every 1 loss to guarantee profitability. And realistically, we have 4 to 5 wins for every 1 loss, realistically, over a 1 year period. So, okay, next month, you feel better again if you didn't quit, because and what will happen, people will get losses and I won't hear from them again for a while. They literally won't hear from them again because they just got discouraged. They're pissed, they lost money. I don't hear from them again. And then months later, I find out from them, yeah, we lost all this money, so we just stopped trading your strategies. And then I literally go through them with them just like this. Well, here's what would have happened if you kept trading. Oh, and if you kept trading, oh, but they literally will stop. So this is what you need to understand, the big picture. You have to keep trading, getting in at least the first 6 months to understand how the numbers work out. There's a very fine line between between making money and not losing money in trading, okay? A few bad choices, you're gonna lose money. Good, good, good. Losing month in October, no big deal. And there's just a percentage drawdown. Here is for the end of the year. And we are literally no trades in December, no trades in December. $24,000, 49% return on the account. If you're talking a 50 grand account, that's about $25,000 you made. If you're talking a $500,000 account, you're looking at $249,000 in profit. Okay. It's all this, doesn't matter what size account, it's the same percentage return. Okay. All right, 2021. Good first month, 0 losses. Another great month for 2021. Small losing month in March. Another small losing month. You just placed it, you just gave back money to the end of the month. That's the way it is. Sometimes you make money, make money, make money. Once again, these are just first targets. If you want to do trailing stops, you can make more. Sometimes you also make less. It's an evaluation you have to do for yourself. Gave back some money end of the month, but that's why you have to keep trading, because the wins have to offset the losses. Another couple of spectacular months with 0 losses. And this is how we finished out 2021. Two trades in December, 55% return, made $27,000. If you're risking $2,000, that'd be $54,000. If you're risking $4,000 per trade, that would be 4 times 27. That's just the way, that's how the numbers play out. So these were annual. Now, I know I don't have the annual stuff yet for 2022 yet, obviously, but I'll tell you, January was a spectacular month. Extremely profitable month of January. I'm not even sure we had any losses. February was a losing month. February was a definitive losing month in February. Gave back some of the profits from January. March was break even. March was literally a break even month, and April was a profitable month. So if you were following all of your rules for the trading for 2022, you are positive for the year. You only had one real losing month so far. I'm still expect 1 or 2 more. But as long as you're consistent, the big picture annual, we're well on our way to that point. So right now we've been getting a lot of bearish moves, and we have basically exhausted our sell signals. So we're waiting for the next retrace up for buy signals before we get our next set of 6 sell signals. So our sells are exhausted already. They're already down. So next move is going to be up for buy signals, and then has to, if it goes down again, we get new sell signals. So we're just in a holding pattern waiting for new trade signals. We're trying to do most long trades and working, or short trades are working. They're both. What goes up and down. Remember, our profit objectives, it's not, we trade long and short. There's no real difference. Long trades get stopped out, short trades get stopped out. Long trades hit targets, short trades hit targets. It's all the same. That's why we use sell stops and buy stops. Just like on the YM, I'm going to shift back to the chart to answer your question there. Share. Remember, this is not investing, this is trading. The same way we had a long trade right here, it didn't fill. We have other strategies that are short trades. Let's take a look at template loan, CCI trend. This is something we're going over now, but we have divergence type trades where we look for divergences and we get sell signals. And those are usually at the top. Like we had a sell signal right here. This would be a divergent sell. Price went higher as the indicator went lower. We use the CCI. So with the CCI indicator, we have a divergent sell. Okay, so we have different indicators to give us different things. We get sell signals where with our short strategies, we get our long signals with our buy strategies. Doesn't matter if the market's going up or down, we trade our signals. But that's all we do. We trade our signals when we get them. And we have what percentage of the trades are on the long side. I really don't know what percentage of the trades are on the long side. I can tell you what percentage of trades are long side on ETFs. And it's about 90% of the trades are long. But it looks about 80% of the trades are long on the ETFs with different sectors. 20% are short. Couldn't tell you what percentage of the trades are long. Most of the trades are long. Trading short is not just the flip side of trading long. It's not, it doesn't work like that. Most strategies will work on the long side, not short. Okay, so when we talk about trading short, most of our short strategies are selling the top. selling market tops. That's where most of our short strategies work, getting in the top. Then after that, you manage that for as much as you can squeeze out of it. And then you wait for the next retrace up for a buy signal. And then you wait for the next swing down for the next sell signal. But most of the trades are going to be long. Realistically, 60 to 70% of trades are long. Doesn't matter what the market doing, doesn't matter when it is, most of the trades are long. And about 30% are short. And that goes along with the strategies. About 70% of our strategies are long. Trying to trade short is so much harder to find strategies, because when the market gets bearish, you get these massive rallies and they whip the other way. So to have the required stop loss on the short strategies gets to be too big for stuff we want to do. It just gets to be too big. So, all right, so it's back to, and this is the E-mini S&P, and it works the same way. Market comes down, hooks up, market comes down, hooks up. So this all works the same way. Yeah, this year is no different than any other year. It's just more, this year's been just volatile, up and down. So there've been more stop outs this year. If you're consistent with your trading, you're profitable. If you're not consistent with your trading, you're probably not profitable. That is why we are technical traders, and sticking with the plan. It doesn't matter what people are saying on TV, it doesn't matter what anything's going on, you stick with the plan, and you know, as long as you're consistent with the plan, you're going to end up anywhere from 20 to 50% annual return on your money in most cases, if you're consistent. If you're undercapitalized, you will not have the same opportunities as people with more money. But if you are adequately capitalized and you can take every trade that comes up, then swing trading the futures is a nice way to generate extra income every year. Just think about even a smaller account, can an extra $10,000 to $30,000, how does that impact your reality, even from a smaller account? So it adds up really fast. Okay, so usually time goes by so fast when we do this, and I really want to do another strategy also, but we just won't have time. Let me go back to the handout. So before we move on, any questions on this approach? Because this is the way we swing trade. We swing trade futures this way. We don't care about what fundamentals are. We don't care about what people are saying, because that doesn't give us timing. The charts, the technical analysis gives us timing. What software you would be using? NinjaTrader. I'm gonna NinjaTrader. Tim, I will send you a link, or email me, Tim, later, and I'll send you a link for where the software is. But it's ninjatrader.com, NINJA trader, TRADER.com, ninjatrader.com. That is what we use for the analysis. And plus we use a TD Ameritrade platform called Thinkorswim. Thinkorswim, we use that for the charts also. So those two platforms are what we'd be using. And we open up a futures account of Schwab. I'm back here. Is anyone interested in working with me on these for the futures coaching? We do, although I say 7 index futures and 3 currency futures, it's actually more than that, okay? It really is more than that, because we are constantly adding strategies, updating old ones, looking for ways to get more profit. We're constantly updating strategies to see how can we get more profit out of strategies we've been trading, and adding new strategies. There's one I'll be going over with Becky a little bit later, taking one of the old strategies. So we're basically pulling up the old strategies and what can we tweak them? How can we get a little bit more profit out of them? Okay. Even get more trades out of them. But when I work with you, it's going to be more than 10 strategies, realistically. But they all literally involve 2 lines crossing, or hook up or hook down. It's 2 lines crossing, hook up, hook down. So visually doing the review goes really fast. Plus I email trade candidates to people each day. So it helps you with your work if you don't have all the time you need to do the analysis. Having me email those to you helps with your time management, and it helps narrow down the list of candidates in your analysis time. So I do everything one-on-one. I don't do big group trainings, one-on-one only. I don't lecture. This was a lecture. When I work one-on-one with you, I guide you. If you don't do your homework, you won't be able to do this. I give you homework to do the prep, and then I guide you along. I teach you how to do all the calculations, with some of which we've done. With the calculation we just did earlier for the stops and targets and risk calculations, realistically, that is more than most traders know how to do. Most traders never learn how to do what we did this afternoon, even in that short amount of time. But I sit with you. If you need me to literally physically sit with you as you place your first trade, I've done that with people before. I'm in Santa Clara. I will meet with you in Santa Clara one-on-one. We have places we can meet. That's very comfortable, not a problem. If you want to work on Zoom, I can work with you on Zoom. I prefer being in person if at all possible. It usually takes 5 to 10 hours to go through the future strategies with you one-on-one. And then we spend as much time as needed. There's no limit on how many hours I want to spend with you to get this going, okay? But you have to do the work. You have to do the trading. You have to do the work every day to get the trades placed. And I can only help you so much, but I can't make you push the button. All right, but I will work with you one-on-one. I will help you if you're new. I will help you set up the accounts. I will literally help you with the broker accounts, with the NinjaTrader account, with the Schwab accounts, with the platform. Literally sit with you, whether in person or on Zoom, to get everything set up. I will give you the charts for NinjaTrader already set up, workspaces already set up. Like, just pull them up. But even that requires some help because it's not that straightforward if you haven't done it in the past. But I will do everything with you one-on-one. And for that, my charge is $17.45. Any one of my meetups is going to be take $100 off that for $16.45 for anyone on my meetups. And if you wanted to do a combination of the options and futures, it would be $34.95. And if you're doing to do both, take $500 off this price for $29.95. I think that's what it is, $29.95, $500 off this price if you want to do both with me. It will require several months of commitment because it's going to be challenging doing them both at the same time. So we focus on one, and then once we get the one going, whether it's options or futures, and we start on the second one. But I like doing both options and futures because the futures will focus on the indexes, Dow, S&P, NASDAQ, and Russell, plus the currencies. There are Aussie, Euro, British Pound, Canadian dollar, and Swiss franc. That's for futures. For the ETFs and options, that is where a lot of, let me show you, I think I have that here too, to show you what we trade as far as that goes. Pull that up for you real quick so you get an understanding of that. Index and ETF stats. Okay. What you're seeing here is an example of what some of the stats look like for the futures. This is not the strategy we looked at today. This is a different strategy, but the plan would show you the win-loss percentage, and this number is profitability. This means $2.85 made for every $1 lost. This means $3.15 made for every $1 lost. That's what these numbers mean. And for the options, these are the sectors we trade with options. Right now, the biggest one that's been in play recently has been oil. Oil has been in play quite a bit on the long side. We had some pullbacks too on the short side, but mostly long side trades on oil. But these are what we trade with ETF options. These are some of the weekly setup. What's in blue means it's 84% or higher. There's some of the weekly chart strategies for each of the different ETFs. If it's in white, it means it's under 84%. We don't touch it. This is some of the daily chart strategies. Once again, tells me the win-loss percentage. for each of the ETFs and with options, but I can trade all these different, I can trade gold, I can trade some Germany ETFs, emerging markets. I would pass an emerging market, it's under 80 for this strategy. I can trade the NASDAQ, I can trade biotech, I can trade oil, home builders, energy, all right? And these are numbers we maintain and make available to those who are trading with us every couple of months. But yeah, once again, these are all different strategies, but it's two groups of strategies. I'll put shift back. So if you want to do both, you let me know, and you know what the discounts are. So for this one, $34.95, and doesn't matter whether you're a beginner or advanced person, I work with you at your own level. And if you're more advanced, then we get faster into it. We get right into it. It's like, what trades are valid this weekend? We get into it. If you're new, it's going to take you a couple of weeks to get accounts set up and gear up, because you have to understand terminology. It's not super technical as far as understanding how options work, but you need some general understanding of how options work. Let's see, what is all this? Something's popping up in my thing here. Memories. Okay. All right, so before we're well over our limit. Oh, we always go over. Do we have any questions on anything? Anything at all whatsoever? I'll answer anything you got. And if you want to work with me on the futures or options program, like I said, it's one-on-one. We take as much time. I always say 6 months, but there are people who email me literally every day since 2009 to confirm their trades are valid, to get updates, to make sure things are right. I don't care how long you want to email me and contact me. That's fine. It's way more than 6 months. I don't charge people for that. If you just want to email me a question, there's an extra charge if you want like the trade listings and stuff like that, and for certain updates that after I initially work with you for a few months, if you want that to keep going, then yeah, if I'll send you the trades. Is it easy to trade? For question by Tim, is it easy to start with futures and explore options later? Either is okay. Futures are more straightforward. Options have more of a learning curve and you have more decisions to make. Futures, you place the trades in the afternoon, sometime between 2 and 5 in an ideal world. Options, like I said, there are more choices to make. In the end, you'll be more profitable with futures. In the end, everyone has a different personality with each one, and you're going to find one fits you more than the other. I like futures because you'll either make money quickly or you're going to lose money quickly, but the pain ends quickly, one way or the other. If you are consistent with your trading, futures is the way to go. If you can commit to that. Futures, I really like futures because of the profitability. And over the last couple of years, my only real consistent income was futures since everything shut down in 2020. All my usual stuff is not available. And futures, I focus on futures because it give me more return on my money than options. I still trade options. My option trades are on energy like XLE and oil and gold. And then I trade futures with all the currency futures and indices. So I have a mix of the two. But either one's okay, but futures will be more specific and options will be more of a learning curve and decisions to make. And there will be subjective decisions to make. It's not all objective with options. You got a few decisions to make when volatility is high like it is now. All right, I'm going to go ahead and shut it down unless anyone has any questions. And we will be back in 2 weeks on June 5th. And we're going to go through one of the option strategies, and one of my favorite ones, one of Becky's favorite ones. And if you're interested in working with me on the futures or options with a discount, message me before this week is over or as soon as possible. I usually let people know by the end of the week, message me for the discount, $100 off the futures and $500 off the combination of options and futures. All right, and then until June 5th, if you message me for any questions, anything, and the handouts are on the chat room. I'm going to put the handouts, the link to that again, just so you have it, and also the link to the article on technical analysis. So here is the link. Hang on a second. Here is the link to the handouts and the technical analysis article. For the new people, definitely read this because it's going to be new to you. And this is something, I'll just give you the link to technical analysis. Read through that. This is how the concept in trading we use as a foundation for everything we do. All right. See you guys in 2 weeks.